Hey everyone, and welcome to today's episode of Pivot to Profit. I am joined by the amazing tax expert, Alexis Sidney. What's up?
What's going on?
All right, y'all. Today's topic is meals and entertainment. It is a huge challenge for business owners to know how to navigate this well and know what you can charge with your business card and what you can't. So we would super excited to dive into all the details and nuances of this. But before we do, look, if you're a business owner, founder, president of a company, and you are wondering, where is my money going? Why is there not more of it in the bank account? And why did I just get this crazy tax bill? We at Pivot Business Group would love to help you. Just go to pamjordan.com to schedule a call with our team so we can tell you where your money's going and how to help you keep more of it. All right, Alexis, are you ready to talk food?
Oh, I'm hungry. Yes, I'm ready.
It is lunchtime and I have not eaten, so I'm going to be drooling here as we mentioned this. You and I are both foodies, so this should be fun.
Yeah, too much fun. How about that?
Yes, Alexis and I were recently hanging out actually in Miami and had some fabulous food and drinks and had a great time. So I know Alexis likes some yummy food. So Alexis, when it comes to business meals, it is confusing at best. So try to simplify what's 100% deductible and what's 50% deductible and what's not deductible, because the answer, it depends, is we know, but try to give us some framework or some guardrails to know this one I know 50% awesome. This one, maybe not. So give us some boundaries to start with.
Awesome. Well, let's start by letting the audience know that there is a thing where meals are actually either 100% deductible, 50, or you just can't deduct them at all. Because oftentimes I'll see it on the books and it's like, hey, I didn't spend $30,000 in meals for the year. And I'm like, well, let's figure this out, because if they're not for an event or office or a luncheon or a holiday party, you just missed some deductions right there. So there is a thing. So now let's talk about the different percentages. In the world of taxes, you can put whatever you want on your books. However, when it comes to taxes, there is a thing where you can either take 100% deduction of your meals. So what falls into that category, just making it real easy for you all, is that if you have an employee, luncheon that the office sponsors, or a holiday party, or anything that deals with the team, or in office lunches that benefit the employees, then those meals are 100% deductible. So you can get, if you spent $20,000, you can write off the full $20,000. The next level is 50% of deduction of the meals. And this is where it gets tricky at tax time, because oftentimes business owners do not separate this on the books. And then it becomes a whole project of, okay, are they 50%, 100? Let's figure this out, because we don't want you to lose any deductions if you don't need to. So with 50% meals, those are meals when you're going out with a client to have a lunch or a business meeting with a client. If you're traveling for business, you get to take 50% of those meals. And then to add a caveat, when it comes to travel, you can do 50% of the meals, or you can start tapping into the GSA per diem rate. You can go view the website and figure out, typically the rate is about $69. But just depends on what city you're traveling to. You can use the per diem rate, or you can just do the 50% while traveling for business. So keep in mind, when it comes to the 50% meals, we need to, just be very careful, because a lot of times we'll be like, hey, I'm with my husband and, this is business. And while it can be to some degree, you just really need to be careful on what that looks like and make sure your documents are in order. But again, like I said, if you're meeting with vendors, clients, if you're traveling, if it's meals for employee meetings or training, stuff to that nature, and it's not so much a whole team event, you can do 50%. Now, what is not deductible, and let's be clear here, is personal meals. Like if I'm thinking about business and I'm like, I'll just I didn't went to Carrabba's today. I'm by myself and I'm thinking about business and I'm going to spend, $100 on my meal. That is not a write-off.
So sad.
It should be, but it's not. If I'm going to kick it with Pam and, we're not doing business, we just decided, hey, let's go get some lunch, girl. I'm not going to use Pam because
we're business partners.
I'm gonna just say my friend down the street. How about that? If it's not legit business and there's no documentation, then it doesn't count. And then let's say this here, because I see this a lot too, where let's say I took a client out and I paid for the meal. You can't go and write that meal off as an expense because I paid for it. Okay. It doesn't count for you. We can't double dip here.
Yeah.
So those are the most common things that are not deductible. Just keeping it easy breezy for this conversation.
I love it. And so let's break down the 100% because everybody wants every time they swipe their company credit card, it to be 100% deductible. So let's be really clear. So if it's a holiday party, if it's a holiday event for your company and it's something that the employer is doing that benefits the employees, this is some people try to do, oh, well, I pay for my team's lunch every day. How does that work?
Unless it's like, hey, everybody's working a late night shift and we are there excessive. And it's like, hey, I need to feed you all because you wouldn't normally be here during this hours. And that happens every day. You can write that off, but I'm sure it gets to a point where it's like, come on now, let's fix the work schedule. But every day lunches for the team, that's not going to fly with the IRS. But periodically, things happen and it's like, hey, there is a need for us to do this. Then, just do everything with moderation, documentation, and, just be forthcoming. How about that?
Yes. So ways that I've seen this succeed is companies will have a monthly birthday lunch. So anyone in the month of September, the first Tuesday, the company buys lunch. And that is the company's birthday lunch. And so everyone whose birthday is in the month of September, we're celebrating them. The whole company's there. That is a company holiday party. It is not just a pizza party for the sake of pizza party.
Right. And that is 100% deductible and you'll be green light with the IRS.
Yes. And so then the other thing I want to hit on is I just this past week looked at a credit card statement from a business owner. She's in the bed spa space and she is swiping her business card for all of her lunches and every Starbucks run. And we had to have a nice conversation that the business is not your personal piggy bank and those are not allowable business expenses. I was like, did you meet a customer or a vendor at Starbucks? No, I just went through the drive-through. Don't use your company card.
It's not a business deduction. Sorry, if you're swiping it, it's going to be owner's draws. You're going to pay taxes on it. So yeah, just be mindful of things of that nature. No good.
Yeah. And then the other thing is if you're traveling for business, then all of that is 50%. And that's something that you need to, like business owners need to be aware of. Just because we were in Miami the other week and having dinner as a team, that's 50% deductible. And that was an expensive meal.
It was a good one too. How about that?
It was some good food, but that is only a 50% deductible business expense. So be prepared when you're traveling and you've got your team at Vegas for an expo and you just drop $5,000 on dinner, only 50% deductible.
And then keep in mind with that, with the travel, like don't mix in entertainment as well, because that is not deductible at all. That went away some years ago. So entertainment is not deductible. And a lot of times we'll see on the bookkeeping reports and I'm questioning like, what is this? Oh, entertainment. No, sorry. We can't do that. We can't do the tickets. We can stick with the meals, but, let's just be really clear because meals and entertainment fall together a lot of times.
Yeah. I think it was in 2018 is when the taxes changed on entertainment. And I had a client, I was a fractional CFO still, with Pivot. And I had a client who would spend a lot of time in Vegas and would also spend a lot of time with clients playing golf and at gentlemen's clubs.
Oh.
Tens of thousands of dollars a year. And so I had to break the news that those activities, the golf trips, the Vegas shows, and the gentlemen's clubs were no longer deductible. And we had to put, it was $40,000+ worth of what he thought was business expenses to owner's distributions. So just be aware that just because you're doing something fun with customers or vendors, that doesn't mean it's a business expense. Like the entertainment part is not like if you want to go to Top Golf, the food would be 50%, but the playing of the golf is 0.
Right. Yeah, it's a fine line. I'm not sure if the law will change later on. Maybe it will, maybe it won't. But for now, we just have to really be very careful on how you're categorizing your books and making sure that you are documenting and supporting all of these things. So that way you're compliant in case you ever got audited. You can say, here you go, here's my stuff, and not have to scramble to figure it out. And then it's like, hey, we can't take the deductions because we can't support them.
Exactly. And it needs to be ordinary and necessary and reasonable for your business. If you are a fully virtual business, there's no reason why you should have $20,000 worth of meals if you never go anywhere. Unless you're meeting with clients, meeting with vendors, meeting with your team, it needs to be reasonable. We had one client that was just doing probably about $500,000 a year, and his meals were not reasonable. Like it was a large dollar amount. And it was because every time he went out, he would swipe the card and he's like, oh, well, I had lunch with so-and-so and I saw my banker and blah, blah, blah. Okay, but that much dollar amount in proportion to your revenue doesn't make sense.
Yeah, you definitely. And when you're meeting with people, just definitely, a tip I always give is that Google Calendar is easy. It's on the phone. You can definitely just open the event and put some description notes in it. You let your admin do that part as well, because you're already, most of the time, I live by my calendar. I'm sure you do too, Pam.
Yes, ma'am.
Need to say, hey, I already know who I'm meeting with, but let me go ahead and add some notes like, hey, this is what we discussed during that meeting. So that way, if I ever had to pull my calendar out, it's there and I have my support there. One of the other things that I often see too when looking at client books, it's this thing called DoorDash. And a lot of times it's like, hey, it's business, it's business, it's business. And that's a red flag as well when you start seeing a lot of that type of activity classified as meals, it becomes questionable as well. So just keep that in mind as well, that you can get dinged on a lot of DoorDash activities, Grubhub, Uber Eats,
Instacart.
Yeah, all of that stuff is questionable. So
yeah. Yeah. And that's where you could have your DoorDash account linked to your personal credit card. And if you use DoorDash for business use because you're traveling, then with your accountable plan, which Alexis and I have already talked about, then you can reimburse yourself. But every time you order something on DoorDash does not mean that it's a business 50% or 100% deductible. So be very careful of the ease of all of these apps. If you are traveling for work, you are overnight, you're away from home, fantastic. But realize 50% deductible. And let's talk about lavish for just a second here, Alexis. Is lavish defined? Because I'm a bourbon girl and I don't like cheap bourbon. So like what is, and I also like steak and I don't like cheap steak. So like what is considered excessive for a business meal?
Oh, you're asking the wrong person.
She's bougie too, y'all.
Oh, okay. Well, yes, the IRS just looks at things. It has to be ordinary and necessary, of course. So, it would be a red flag. And I think we just have to use our best judgment for the most part, because there isn't a law that says, hey, it has to be under such and such. Now, companies do have policies where I've seen a lot of different companies have their own stipulations like, hey, you cannot spend more than, according to like, let's just say we use per diem rates, but anything like over this amount requires approval or things of that nature. And that kind of reels in the excessive, hey, I'm going to go get this $2,000 bottle of bourbon. It's for the team. We're all meeting together. But that could be considered lavish and, cause some scrutiny. But again, there is no law that says, hey, we can't do this. Now, you did mention earlier where your client that you were working with, they didn't have the income to support the lavishness of the expenses. Now that comes into play as well because, we're looking from an audit perspective, like how can you have, hardly any income, but we didn't spend all of this money. Now we have all these losses and most of it is due to meals and entertainment. And we're buying $1,000 bottles and, $200,000 steaks with the gold,
Gold leaf on it. I've never had one of those. I've seen it on a YouTube video though.
And that can be considered excessive and it's not ordinary, it's not necessary to have clients. But then again, you just do have to look at the nature. If it's a high-end luxury client, like, hey, we just got Hermes as our client and we have to put the Ritz on, it's expected we may have a little, extra expenses. But if it's our mom and pop convenience store down the street and, they're our client, it may be a little bit more basic. So just really keep that in mind. You have to use your best judgment when it comes to these type of situations. But again, there is no code of law that has a specific dollar amount that says it cannot be over or under this amount. And the IRS doesn't define lavish in their code. I haven't seen that.
So the word of advice is be reasonable. So if I'm going to get a 2-ounce pour of like Buffalo Trace, put that on the card. But if I'm going to get a 2-ounce pour of Pappy's, I'll pay that personally. That would be a little excessive. I got you.
Right.
So really, business owner, it's important to know that you can't just be swiping your card every time you put something in your mouth, just because it's somewhat related to, a business thing. Make sure that you understand what the rules are. Because say, for example, for easy math, you have $20,000 of meals on your books at the end of the year, and you don't distinguish between what was 50% and what's 100%, your tax professional is automatically going to take 50% of that off. So they're going to put $10,000 to your net operating income, which then becomes taxable to you as the business owner. So just because it's coded as meals, realize come tax time, if you're not distinguishing between 100% and 50%, half of that is automatically going to go to the bottom line and is going to become taxable.
Right. And it can change your tax picture.
If you have a large number next to meals, yes. All right. So documentation is everyone's favorite. So we are out, we're at a business meal, we're traveling, whatever. What are some best practices of what to do with that receipt?
Definitely. So depends on, the size of the company. Again, if you have more than, I would say 5 to 10 employees and they're using or being reimbursed or things of that nature, it's really good to use a log and have a process in place. So typically in my olden days, we would take the receipts and we will fill out an expense report and document everything line by line. So that way you're getting reimbursed and, the company has the receipts file, everything supporting. Sometimes it's like, hey, you can put a stipulation, like if it's under $75, don't need the receipt. But some companies like, I want to see everything. I don't care what it is, just attach it and submit it for proof. If you're more of a techie company or you're like, hey, you could just, I tell clients all the time, just snap a receipt of use your phone to snap. We all have phones.
Take a picture.
Yeah, and just create a folder in your favorites, like receipts. And then that way everything is documented there and you actually have the physical receipt. And then that way, you can go back and just kind of set up your system with your bookkeeping team. They can attach it to the actual line item in the system, or just have a folder to say, hey, this month, here they are. Go figure it out if we ever need it to show them. And then you just have proof that way. So it just really depends on the size, how much you typically do, because if you're not huge on, meals and things of that nature, you really don't need such a robust system. But if you do a lot of reimbursements and meals and, traveling, it is good to have a formalized process. And that way, everyone knows how to manage it, and make sure timeliness is a good thing as well. Have a parameter like, hey, within 2 weeks of your travel or 2 weeks of you making that, meal purchase or whatnot, we need the documentation submitted to us. So that way it's not lingering to the end of the year. And then, that becomes a whole issue, because the IRS is cracking down on the timeliness of the reimbursements and things to that nature when it comes to, the meals and things, if you're reimbursing people for them. But if it's just like, hey, business owner to business owner, you don't really have to follow the timeliness. Just make sure you save the receipts and document the nature of the meetings.
Yeah, no. A lot of times what I do is I just take a picture of it on my phone. And when I'm writing the tip and signing it, I'll just take the copy that I'm supposed to keep and I write who I was with or what the event was, take a picture of it, and I just link it to QuickBooks. And so the great thing about that is it automatically links that receipt with the transaction in QuickBooks. So I could go into QuickBooks right now and see the receipt. And if I forget to do that, then I have it in my phone. And then I also have an actual folder in my office with all my receipts too, but it's written down who I was with. And Alexis also made a great point about your calendar, because if the IRS were to ever come in and audit, you can always look at your calendar and be like, oh, August 12th, lunchtime, $120. Let me see who I was with. So that you can say, oh, I was meeting with my banker and negotiating blah, blah, blah. Just the point is, something is better than nothing when you have an auditor across from the table from you.
Yeah, and it's simple. We don't have to make this one too complicated and too complex. So, again, there is no IRS code that says this is how it has to be. We just need to know who you met with and the nature and the date and time, of course, and that'll suffice.
What if the business owner has a physical location and they have like snacks for employees and customers, or coffee, or even like hair salons that provide like adult beverages? How is that treated? Is that meals? Is that supplies? Like, what does that look like?
Yeah, just depending on the nature. A lot of that stuff can be classified as, you can do it as meals or supplies for the business, because it's something you're doing consistently. It just really depends with my clients. I don't really have a preference, where most of them will put it under meals and it's 100%, because it's just like snacks and things of that nature. But some are like, hey, I order it with my office supplies if I use like a Uline account or things of that nature. So I'll just put it under there and kind of have a subcategory as supplies. But definitely, we don't have to count 50% of
Yeah,
the chips and the coffee and, the sugar cubes and things of that nature.
I got you. I got you. So let's talk about some mistakes that we often see. You said DoorDash is a red flag, being lavish is a red flag, being by yourself is a red flag. What other mistakes do you see people making as business owners swiping their card for meals?
Yeah, definitely. Again, we just harped on the documentation part, but definitely just, not being mindful of the buy yourself stuff. I see so much of that, and it's just like, we can't do that. And then we talked about it also. Again, it's just really the entertainment, confusing the two together, when we're in an environment where it is possibly some entertainment and a meal, or just thinking like, hey, it's all meals and entertainment. It all goes together. And it's like, no, it doesn't. So those are the biggest things. They're pretty standard across the board. But the biggest mistake, when I put my tax hat on, that professional hat, is that we're not classifying, or I don't see it on the books the right way. So especially when it's large amounts, that it can really change the trajectory of your taxes because you're thinking,
Yes.
hey, I got all these expenses, and it's like we got to start backing this stuff out. So just the education piece on really being mindful of how this stuff should reflect on the book, so you truly have how the outcome is going to be for taxes and not get, surprised, like we can't use half of this stuff you have, and sorry. And they're like, what? That part. So
Yeah. So from a bookkeeping administrative side of things, make sure that your chart of accounts, whoever's doing your books, there's a difference between 100% deductible and 50% deductible, so that you know that all your travel and casual team meals and those things go in the 50%. But this is our quarterly team bonding meeting lunch. Fantastic. This is everyone had to work late, so I ordered pizzas. That's 100%. But make sure that you understand the difference. But here's the thing, y'all. If your chart of accounts doesn't have the difference between 100 and 50%, your tax professional is going to assume all of it's 50% and make half of it go away.
So you just really want to use accurate accounting and just be educated and know, because you want every single deduction you can get. And we don't want to overlook something when in true indeed it is 100, but it's like, oh, we're automatically going to take the 50 because that's what we know to do. So just really keep that in mind. And then another one, again, I really just can't emphasize enough, is the friends and family. Like we are like, hey, I'm just going to say this is business because we're out. This is business.
Girls brunch. Woo!
Yeah, so just really be careful there. I'm sure there are some times when you may be talking about a business opportunity or something, but just really be mindful. We can't have every Friday, it's, hey, I'm going to hang out with the girls, and it's business per se, when it true indeed is more hanging out and putting your hair down.
Yes. Yeah. So just be honest of whether it's a business event, if this benefits your business, if you're talking about business. A lot of married couples that own businesses together, they try to deduct all their meals. And I understand every conversation that you have is about the kids and about the business and about the house, but not every dinner eating out is necessarily a 50% business deduction. So be reasonable with it. If you go out and you're talking about the budget, you're talking about employee challenges, makes sense. But if you're also out with your kids and all of that, probably not a real business dinner.
Right. Yeah, definitely. So I'll just say, hey, rule of thumb, make it one a week, but not every day. How about that?
Seems fair. Seems fair. I love it. All right. So, y'all, we've unpacked a whole lot today with meals. Just remember that one of the great benefits of owning a business is being able to use the money for business use so that it's deductible. So you're using pre-tax dollars, but be aware that how you do it and when you do it will determine whether you get to deduct the full dollar or only half of the dollar when you're out eating and drinking with customers, vendors, and team members. So make sure that you are clear on the distinction and that your team is coding it correctly. Otherwise, you'll automatically lose 50% of it, because that's what's going to happen at tax time.
Yes. And I don't want that for you.
No. Awesome. All right. Thank you so much, Alexis. This has been a fun topic. I'm still hungry, so now I'm going to have to go get some lunch and use my personal card because I'm by myself. Let me just be clear that I'm behaving by these rules, even though it's hard. Look, make sure that you subscribe these episodes. We're on Apple Podcasts, Spotify. Our videos are on YouTube. We appreciate you guys being here. Remember that it is not what you make that matters. It's what you keep. We'll see you next time.